We shift focus to Mozambique and that for an economic update on that economy. Capranzine Hunguana, who's global markets head at FNB Mozambique, joins us now for that conversation. Thanks so much, Capranzine, for joining us this morning. Let's get a broad economic overview from your end, your sense of the Mozambican economy and where we stand right now. Of course, with this month seeing the Mozambican Central Bank cutting its borrowing costs to 9.5%.
Yes, the central bank cut the FPC rate, the standing lending facility rate, from 10.5 to 9.5% at the beginning of this month. And this is largely as expected by the market, and we still believe that there's still room for more cuts in the first quarter of 2013. And I do believe that there's still room for more cuts because we have seen growth starting to respond, though very mildly, to the cuts in borrowing costs. But the central bank is still facing very low inflation rates, in fact, historically low inflation rates at the moment. So while inflation rates remain at these levels, there will certainly be more room for the central bank to change monetary policy.
It's interesting that you say that you've got inflation, sitting as low as they are right now. Of course, that coming at 1.8%. It's still an acceleration to 1.8% that we've seen for the October period from 1.5% the month earlier. So what risks to that inflation scene are we actually facing?
Yes, this increase comes due to seasonal factors. As we know, going into the festive season, there is a pressure on the inflation rate, not only in Maputo but in other major towns in Mozambique. So I wouldn't say that it's a change in the inflation trend in Mozambique, and I do believe that in the first quarter of 2013 we may have a better indication of where inflation is going. We cannot read so much at the moment into the last 2 months increases in inflation, and this compares to the 5.6% target set for the year. So yeah. It's the 1.8% is way below the target at the moment.
What's your forecast for the growth scenario? Because as you highlighted or alluded to a little earlier, global growth, as that slows, it's threatening Mozambique's expansion itself. So what's your outlook on that growth front?
Growth will definitely remain strong in Mozambique in the back of FDI investment into minerals and gas. Apart from that, there is a lot of investment that the government is going to attract into the infrastructure sector, mainly railways and ports. This week we have seen the local railways company announcing that they are going to launch a bid of $2 billion for railways and ports in the north of Mozambique in an effort to cater for the transportation of coal from TET into the sea. So I do believe that the growth will remain in the region of 7.5% to 8% in 2013.